Happy Friday, Brian Manning here with your weekly update, and I can't believe I'm saying this again, but it's jobs week. Unbelievable. Another month has gone by. So let's just get right to it. Monday of this week, we got PCE. That's the personal consumption expenditure. And this happens to be the Federal Reserve's favorite gauge of measuring inflation. And PCE was pretty tame. It was up year over year at 1.7%. And, you know, we've talked about this before. Still have to say we're not a believer this is the best gauge of inflation because the PCE does not take into account housing expenses that we all incur and also out-of-pocket medical expenses. But for whatever reason, the Fed looks at this and it's a pretty decent and tame number. Also, Monday this week, we got personal income. Year over year is up 0.1%, so that's not bad. And personal spending for year over year is also in line with expectations. Prior month was revised slightly, really not a big deal. Monday this week, we also got pending home sales. So for the month of February, pending home sales were up 3.5%. Really good to see, strong number, and just really healthy, and kind of we anticipate that the housing market is still doing really well. And moving into our prime home buying season here, probably just going to continue to see a really strong housing market here locally and also on a national level. Tuesday this week, we got Case Schiller. A little bit dated. Case Schiller is always about a month-ish behind. And in January, they did their 20-city study. So that's 20 cities across the nation, Denver being one of these cities. And appreciation in their 20-city index was up 5.7%. And on a national basis, appreciation up 5.4%. Again, it's kind of like the Goldilocks number. Appreciation is good, not too hot, not too cold, still sitting really strong. Also really big Tuesday this week, Janet Yellen's testimony. Comments, very dovish. Markets were loving this. You could just kind of hear the reluctancy in her voice and just no immediate fear of a rate hike. Bond markets rallied, mortgage rates got lower, and we're still seeing some benefits in the mortgage market today. Wednesday this week, ADP, first employment report. ADP came in exactly at expectations at 200,000 new jobs created for the month of March. And then today we get the BLS, Bureau of Labor Statistics. BLS came in as expected at 215,000 new jobs and very minor revisions for the prior months. So, you know, all this puts the Federal Reserve in a really difficult spot. We're seeing pretty solid month over month employment and economic data here in the U.S., but the Federal Reserve probably not raising rates anytime soon because they just have this fear of what's going on globally. When everywhere else in the world is dropping rates, it seems really difficult for the Federal Reserve to want to raise rates. So be interested to see, but probably definitely rate hike off the table for the month of April, and we'll have to play it by ear and see what happens from there. I'm around all weekend. If you have anyone needing pre-approved, please call me and let me know. I'm going to get out Saturday, do a little backcountry skiing during the day. So if you call me Saturday during the day, just leave a message. I'll call you when I get back from the mountains. Hope all is well. Have a great weekend, and I'll talk to you soon.